Then let's get to the tech wreck with the Mag 7 getting hit. The whole group trading 23% off the 52-week highs, losing about $900 billion in market cap today. The biggest laggard is Apple, down about 9% because of its similar exposure as retail has to the Asia supply chain. Down for its fifth week in 6. Amazon, also remember, Amazon Retail does a lot of this as well. It's down 8% as it heads for its 9th down week in a row. Microsoft, standout of the group, had been lagging the prior year or so. Now it's down just less than 1%. Daniel Newman of the Futurum Group and James Cakmak of Clockwise Capital are both here to help us wade through all of this. Daniel, where is the opportunity?
Yeah, it's hard to feel like there is any opportunity right now, but I am talking to a number of CEOs today. I talked to Bill McDermott just a few minutes ago, and he's saying to me, CEOs are really focused on what they can control, Kelly. But I think there's a big opportunity.
Which is what, by the way, Daniel, what can they control? Because what people are worried about is one of the things they can control is headcount. And you don't want to see companies turn to that and say it's time to sort of pull back because we have to control expenses when we don't know what's going to happen, as Courtney just said, with profits and revenue growth.
Yeah, I think the lean into the AI opportunity, though, Kelly, it's going to be substantial right now. First of all, I talked to a different CEO on this topic, and basically the entire enterprise AI build out will continue. You'll actually see companies doubling down on R&D. So when you look at the mega cap tech companies, that's not going to slow down. In fact, they realize that is their future, and they see the overall tech opportunity as deflationary. One of the other big opportunities that I see is around the IP transfer. So a big part of what's going on, and I haven't heard a lot of this in the hour so far, is the negotiations. These CEOs, and my perspective is this is the beginning. It's an opening salvo of negotiations with some of these critical markets like Taiwan, like China, like Vietnam, where a lot of this, large AI equipment is being assembled and shipped.
Right.
And what we don't have here is the security of knowing that we can manufacture these chips, and in an event of a China-Taiwan, conflict, that we won't be stuck in time because we can't move forward to the next node. And one other thing I'll note here is national security is economic security. The cybersecurity space here is an opportunity. Companies are going to actually need to double down. And during this trade war, we're going to see more nation state actors. We're going to see more bad actors across the board. Companies, enterprises will need to secure. And no matter how much pressure they're under, they're going to need to invest in those areas, AI and cybersecurity. That's
it. Maybe we can show, Hack is down almost 5%, but again, everything's down today. Maybe we can cycle through some of those names, CrowdStrike as well, where you see this could be an area of opportunity. James, you were quite cautious on air with us a few weeks ago. That's being borne out today. How much longer do you stay in a more cautious portfolio position?
I think for the foreseeable, I think after last night, we can say safely that we're in a period of maximum uncertainty. I think we're in the very early innings of the reshaping of the global order, global alliances, reliance on the United States. And Kelly, you mentioned the weakness of the dollar. I think Larry Fink is absolutely right. And the hegemony of the dollar is in question as the reserve currency. So here's what we know. We know that there's a lot that we don't know. But, and also we know that earnings and the CFOs of these companies also don't know a lot, which means that they're going to be extremely cautious with their forecasts, which means that earnings are likely going to come down just from a defensive posture in terms of setting expectations. And then what does that mean to multiples? So right now, you look at the NASDAQ, 50%, the top 10 stocks constitute 50% of the index. We're sitting at 18% right now. And right now, we think that, over time, if this continues to play out as such, you could conceivably see the S&P at 4,800. So we'd be selling it to strength and continuing to rotate the portfolio toward the barbell strategy we talked about last time.
James, what happens if we get a series of more constructive announcements from the likes of the trading partners, what have you? Is 4,800, kind of the definite stopping point, or do you have to just be very, very nimble based on the news flow?
The latter. Maximum uncertainty necessitates maximum adaptability. So you have to be incredibly nimble. Like you said, you can have green shoots here that go 1 to 5% up over the course of a couple of days. So you have to be cognizant of potential good news on that front. But that being said, if the trend continues on the macro perspective, that is where the downside could conceivably go. But you got to stay nimble. Right now on our ETF, which is a long-only ETF, 20% of the portfolio is short. And that's not something that you see every day. And, for every dollar of Dollar General or a Costco that we own $1 of MicroStrategy or Palantir. That's how you play the barbell. We're playing it down the middle, and you got to stay balanced. But right now, I think the worst case scenario played out last night, and you got to stay nimble and assume that CFOs will be very conservative this coming earnings.